you're paying $2 grand a year for full coverage auto insurance. And if you got into an accident tomorrow, there's a decent chance you'd still be on the hook for thousands of dollars out of pocket. That's not a typo. That's the insurance industry's favorite little trick. Full coverage sounds like it covers everything, right? It's right there in the name, full coverage. But here's what nobody tells you. Full coverage isn't actually a thing. It's not a policy type, it's not a product. It's a marketing term that insurance companies use to make you feel protected while leaving some pretty massive holes. I'm insured, and today I'm going to show you exactly what you're paying for and what you're not. Here's the problem. When most people hear full coverage, they think it means, well, full as in everything. If something bad happens to your car, you're covered. But that's not how it works. Full coverage is just a combo meal. 3 items thrown together, and the insurance companies are happy to let you believe it means total protection because, well, it sounds better than saying here's a basic bundle with some pretty significant gaps. Let me say it clearly. No insurance company sells a product called full coverage. Progressive doesn't, Geico doesn't, State Farm doesn't. What they actually sell you is a 3-piece package: liability, collision, comprehensive. That's it. Those 3 things. And while they cover a lot, they leave out more than you'd think. But wait, it gets worse. Most people I talk to don't even know what those 3 things actually do. They just see the monthly payment and assume they're fine. So let's fix that right now. Okay, let's break down each piece, what it does, and where the holes are. This is the one your state requires. Every single state except New Hampshire says you have to have at least some liability coverage. Liability covers the other guy. You hit someone, your liability coverage pays for their medical bills and their car repairs, not yours. Most states require minimum limits that look like this: 25, 50, 25. That means $25,000 per person for bodily injury, $50,000 per accident total, and $25,000 for property damage. Now, here's what should scare you. The average new car costs about $47,000. You rear-end someone's brand new SUV and total it. Your $25,000 property damage coverage covers about half. You're on the hook for the other $22,000 in medical bills. One ER visit after an accident can easily hit $25,000. If you injure 2 people, your $50,000 cap is gone before the ambulance leaves. Let that sink in. The state minimum is designed to protect the other driver minimally. It's not designed to protect you at all. This one covers your car when you're in an accident, regardless of who's at fault. You hit a guardrail? Covered. You back into a pole? Covered. You slide on ice into another car? Your collision coverage pays to fix your vehicle. But here's the catch, and there's always a catch with insurance, isn't there? You have a deductible, usually $500 or $1,000. That's the amount you pay before insurance kicks in a single dollar. So if you have a $2,000 repair and a $1,000 deductible, insurance pays $1,000. You pay $1,000. And if the repair costs less than your deductible, insurance pays nothing. You're on your own. Oh, and if your car is older and worth less than the repair cost, insurance won't fix it. They'll declare it a total loss and cut you a check for the car's actual cash value, which thanks to depreciation is probably way less than you think it's worth. This covers damage to your car that isn't from a collision. Theft, vandalism. Hail. A tree falls on your car. You hit a deer, flooding, fire. Same deal though, you've got a deductible here too. And same rule, if the repair costs less than the deductible, you're paying out of pocket. Comprehensive is usually the cheapest of the 3, and honestly, it's the one most people understand the least. They think collision covers everything. It doesn't. Without comprehensive, if someone steals your car at 2 a.m., you get nothing. Okay, enough theory. Here's where things get interesting. And by interesting, I mean potentially expensive. Here's what your full coverage does not include. 1, gap insurance. If your car is totaled and you owe more on your loan than the car is worth, gap insurance covers the difference. Without it, you're still paying off a loan for a car that no longer exists. Yeah, that happens a lot. 2, rental reimbursement. Your car's in the shop for 3 weeks after an accident. You need to get to work. Rental reimbursement pays for a rental car. Without it, that's on you. At $40, 60 cents a day, that adds up fast. 3, roadside assistance. Flat tire at midnight on the highway, dead battery, out of gas. Not covered unless you specifically add this. 4, uninsured motorist coverage. About 1 in 7 drivers on the road has 0 insurance. 0. If one of them hits you and it's their fault, your uninsured motorist coverage is what pays for your medical bills and car damage. Without it, you're relying on your own health insurance and collision deductible if you even have collision. 1 in 7 drivers. Uninsured, think about that next time you're sitting in traffic surrounded by 100 cars. Statistically, about 14 of them have no insurance at all. 5. personal belongings, someone breaks into your car and steals your laptop, your phone, your gym bag. Auto insurance does not cover that. That's a homeowner's or renter's insurance claim. Different policy, different deductible. 6. Mechanical breakdowns, your transmission fails, engine blows, not covered. Insurance covers accidents and damage, not wear and tear. Let me show you how this plays out in real life. Meet Jessica and Marcus. Both drive a 2022 SUV worth about $28,000. Both pay for full coverage. Both have a $500 deductible. Jessica is smart about it. She added gap insurance, rental reimbursement, and uninsured motorist coverage. Her monthly premium, about $195. Marcus went with the basic full coverage bundle. No extras. His monthly premium, $165. He's saving $30 a month and feeling pretty good about it. And here's where that $30 savings comes back to bite him. Then it happens. Both get rear-ended at a stoplight by a driver with no insurance. Both cars need $4,000 in repairs. Both drivers have mild whiplash, about $3,000 in medical bills each. Jessica's situation deductible, $500, she pays this. Repairs, insurance covers the remaining $3,500 medical bills. Uninsured motorist coverage pays the $3,000 rental car for 2 weeks. Coverage, she paid about $15 a month for rental reimbursement. Total out of pocket, $500. Marcus's situation deductible, $500, he pays this. Repairs, insurance covers the remaining $3,500. Medical bills, $3,000, he pays this himself through his health insurance with his health deductible rental car for 2 weeks. $70, he pays this out of pocket. Total out of pocket, $4,200 plus. Now, here's the number that should make you go check your policy tonight. Marcus saved $360 a year in premiums. He lost $3,700 in a single accident. That's the difference between full coverage and actual protection. All right, here's what you should actually do with this information. Step 1, pull up your current auto policy right now. Look at your declarations page. It'll list every coverage type and the limits. If you can't find it, log into your insurance app or call your agent. Step 2, check your liability limits. If you're at the state minimum, 25, 50, 25, that's not enough. Bump it up to at least 100s, 300s, 100. It usually costs just $10, $20 more per month, and it protects your assets if you're at fault in a serious accident. Step 3, if you're still financing or leasing your car, get gap insurance. Your lender might offer it, but your insurance company usually has it cheaper. If you own your car outright and it's worth more than you owe, you probably don't need it. Step 4, add uninsured motorist coverage if you don't have it. Remember, 1 in 7 drivers out there has nothing. This coverage is cheap and it protects you, not them. Step 5, add rental reimbursement. It's usually $2, $5 a month. That's less than the cost of 1 day of renting a car. If your car is ever in the shop, future you will be very grateful. Quick note, everything I've shared here is general educational information, not financial advice. Your specific situation, state, and policy will vary, so talk to a licensed insurance agent before making changes to your coverage. If this opened your eyes to what full coverage actually means, hit subscribe. I'm dropping new videos every Monday, Wednesday, and Friday, breaking down insurance topics so you don't get screwed by the fine print. Drop a comment below with your biggest insurance question, and I might make the next video about it. I'm Insernerd, thanks for watching. And go check your policy seriously right now.